Welcome back, everyone. Anthony Speciale here with Speciale Analysis Unedited and on the Edge of the Market. Hope you're having a fantastic day, as always. So today we're going to break down opportunity that had transpired on Bank of America, ticker BAC, that offered us a 16.78% return on investment. So the reason I take the time to go through these trades is not to brag. Nobody cares what somebody's done in the past. For me, it's about exposing you all to the educational aspect of this, of every technician, every market technician, every analyst approaches the market in a different way. I do this every single day so that you all get familiar with the way I look at the market. Why, you ask? Well, simply because when you go to look at the market for yourself, you may go, Anthony looks at it from a little bit of a different angle than I do. And perhaps if I spin my approach ever so slightly, not necessarily change what you do, but just look at it from a different angle, you may see something different. Listen, I do the same thing. I have the colleagues that I work with at Traders Agency. I mean, they're some of the smartest guys out there. Really refined traders, and I really do. I attend their classes, I read their material, I watch what they do. Not because I'm not a successful trader already, but because I may pick up on something that I'm just not accustomed to looking at simply because their approach to the market is different than mine. So the benefit for you to see how these trades transpire is that you get the opportunity to take a look at, things from a different angle, if you would. So we're going to look at Bank of America real quick. We don't spend a ton of time on it, but you can see, market went up and eventually made a turn here. So we had some structures that were running somewhat parallel. And those are the ones that we were able to work off of. So as the market turned, you could see the angles of the channels had turned with it. And essentially, we had finally broken this teal channel right here that I'm running the cursor along. So you see where we tested it the first time and failed to close below it. We tested it here. This did not offer more than 1%. That's my rule. My rule is 1+% confirmation. So this did not offer me the opportunity to enter, but this did. So the way I confirm is I measure from the structure, which is the teal line, to the close of the candle. And you can see I got roughly 5.36, 5.44%, somewhere in that ballpark, more than 1%. So you get that's the point here. So the idea to place the stop is this is where the buyers remained in control because they did not overcome this support or resistance structure. And this is where the sellers took over control. So I placed my stop above. This is my entry. Now, where is my target? So I have to look to this descending gray channel as my initial target. So I come from here and I give a 1% buffer, which put me 34.14, if that looks about correct. So this is my original entry target. You can see price came down and then bounced back up, tested resistance, and then ultimately failed and acquired the advanced target. Now, when I say advanced, meaning as time progresses, this support structure continues to descend. It gets lower, 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 lower. And as it does that, my reward or my profit target gets bigger and bigger and bigger and bigger. So there's a couple ways you can do this. You can take partial profits at your original target if you want. You could take all your profit at your original target if you want. You can use this as a mechanism to advance your stop. You can do all kinds of things, but that's ultimately up to you. But the position did as we, transpired, expected it to transpire. It did what we were expecting. As we advanced our target, price action ultimately did test our target. And once it did, we locked in our profits and we were done. So that's kind of the thought process of how I walk through these trades. It really comes down to long-handed technical analysis. I draw all my, everything on the chart is hand drawn with the exception of the 200-day moving average, which is this line here. This is a market breadth indicator. This is simply volume. There's nothing fancy here, nothing proprietary outside of the fact that it's just my own proprietary trade plan. It's my own approach to the market. Everything is hand drawn. And I do it that way because, I get intimate with the position. I get intimate with the analysis, and I you know, it's either favorable or it's not. And if it's not, I step away. If it is, then I know I can put some money to work. So, as always, the purpose of these videos is for you to look at the market from a different angle. So I hope you learned something today. I hope you enjoyed the little bit of time that you spent with me. And with that, I hope you have a wonderful day. If there's anything I can ever do for you, please feel free to reach out. More than happy to help you in any way I possibly can. So I wish you many blessings. I wish you a great day, and I will hopefully see you again tomorrow.